great job, beautiful family, and a perfect home. But in a split second, everything can change. And if you are no longer around, who is going to look after your family?
The idea is that the money that you get from the policy should generate an income that will be enough so that at least as far as financially things are concerned, your family is in the same position as if you were there. Obviously nothing can recompense for the loss of a human being, but at least the financial recompensation can happen.
In case something happens to you, your life insurance should first pay off all your loans, so you don't leave your loved ones in debt.
So your credit card outstandings, your personal loan outstandings, your automobile loan outstanding, and biggest of all, your home loan outstanding. Insure all of that, especially home loan.
After the loans are paid off, your family should be able to invest the remaining amount in a fixed deposit and earn interest that's equal to your current salary.
Roughly, I would say 15 to 20 times of what I am earning today is what I should be insured for. And the people should also be aware of the fact that there is an inflation that will keep eroding the value.
So if you make about 10 lakh rupees a year, you need a life cover of at least 1.5 crore rupees to be adequately insured. That's the reason why we recommend term insurance plans. There are several life insurance products in the market, and most of them combine life insurance and investment. But a term insurance plan is a pure life cover. And the advantage of using this product is that it's far cheaper to a unit-linked insurance plan. So if you are a 30-year-old male and you want a life cover of 1.5 crore rupees, a term insurance policy will cost you a minimum of 15,600 rupees a year.
If you try the same through a ULIP route, you might end up paying 10 times that amount for getting a 10 lakh insurance. Now, you don't get your premium back in term insurance, but it's a very small cost.
Over the last year, stiff competition in the market and better research about mortality rates have allowed insurance companies to drop the premium on their term plans, making them even more affordable. Premium on term plans have dropped between 25 to 50% across insurance companies. So a cover of 50 lakh rupees that would have cost you about 9,200 rupees last year is available for as little as 4,500 rupees this year. That's half as much.
I think one factor is competition, clearly. As there is more awareness being created about the benefits of taking a term insurance, there is more demand, and to cater to that demand, more insurance companies are coming out with products.
What's more, term policies are also now available online. The money that the insurance company saves on sales and distribution is passed on to customers as a discount.
That are available for as much of a discount as close to 50% compared to other term policies. So as long as you're getting good service and as long as you're getting the right kind of advice from the help desks of these companies that are selling policies online, I'd encourage people to explore getting a cheaper policy online.
We have gone direct to the customer, so we have cut down the intermediation cost, and that's it's a significant cost. So that benefit is getting passed on to the customers. And also typically the customers who would come online and buy would be a different profile.
So what do you do if you already have a term plan in force? Does it make sense to let your old policy lapse and start a new one?
So if you're up to 35 years old, it might be cheaper to let the old policy lapse and take a new policy. Up to 30 years, definitely. I'm quite convinced you would get a pretty good rate.
You see, a life insurance policy is a legal contract. So even if the prices in the market has fallen drastically, you will not be given that advantage when you renew your policy. So if you're getting a lower premium quote for your age and your health, lapse your old policy and buy a new one.
If your policy is falling due, if your existing policy is falling due next month, apply for the new policy today and make sure that you have the new policy in place before you allow the old policy to lapse. You should not leave yourself uncovered even for a single day.
But be careful of any health issues you might have developed. That could really add to the cost of your new policy.
When I bought a policy 5 years back, I might have been in a very good health, so I got a good standard lives rate. After 5 years, if I had had a heart attack, and if I'm going to buy now, my premium rate could change because the insurance company will see me as a different risk now.
So remember, go buy a term insurance policy today, and don't be afraid of health checkups. It takes a few hours, but it's worth the trouble, and it's free. Make sure your family has a copy of your policy document in case of emergency. And lastly, remember, a term insurance policy, unlike your other investment plans, will not return any of your money at the end of the term. But the high cover it offers is worth the price.